Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. In this video, I will not be doing reviews, and instead I'll start coverage on several new names and FX crosses, as well as ceasing coverage on one name that I have covered in past videos. I've put in timestamps, so please use them to skip to the names that interest you. The most important chart in this video is the dollar index, the DXY. Price action development is suggesting that the DXY may be forming a bearish pattern, a rising wedge. It was just over here rejected by the resistance trendline a few days ago and may be headed lower towards the support trendline. Also, if we look at the RSI, there is a divergence between the RSI, the relative strength index, and the price action, as in, if you look at the DXY, price action is going higher and higher comparatively, but if we look at the RSI, it is going lower and lower comparatively, and this usually signals a bearish reversal going forward. Still, we can only confirm a bearish outlook if the DXY breaks down below the support trend line. The DXY could just decline from here and bounce off the support trend line to resume its upside for all we know. The bearish potential in DXY coincides with the bearish potential in the dollar against the Singapore dollar. We call it dollar Sing. This cross is also forming a rising wedge, a bearish pattern. Price action over here just got rejected by the resistance trend line, but as said, we need a breakdown below the support trend line to confirm a bearish outlook. Until then, dollar Sing may just bounce off the support trend line to advance further, or even break out above the resistance trend line to invalidate this bearish potential. Moving on to equities, I'll start off with Shell PLC, a British oil and gas company. There is bearish potential in Shell, but there is also some uncertainty over whether it has completed a head and shoulders top or it is still forming one. So here are two scenarios. Assuming that the neckline is upward sloping, then last week's price action has completed this bearish pattern, and the textbook target is at 1820.2. Necklines that are not true horizontals commonly occur, but I prefer to give it some doubt just to be cautious. So this is where I propose the second scenario, that the neckline is actually a horizontal neckline at 2345. If assuming this is true, then Shell is expected to fall a little bit more in the upcoming week or weeks. It bounces off 2345, but this rebound does not exceed 2961 and it falls again. Now, if this were to occur and Shell breaks below 2345, then this will be the second shoulder. The rebound and decline will be the second shoulder, and this will complete the true head and shoulders top, and the textbook target is at 1731. So I think it is best to wait for, if Shell were to decline in the upcoming weeks, I think it is best to wait for a weekly close below 2345 just to confirm that scenario 1 is the correct scenario. Otherwise, if it bounces off 2345, then we have to take the assumption that the scenario 2 is the correct scenario. Next is Mastercard. There is also bearish potential in Mastercard, but this one is in a very early stage. I suspect that Mastercard may be forming a rising wedge, a bearish pattern, and the price action over here was just rejected by the resistance trend line. Price action is expected to be lower, but I would not place my bets on a breakdown below the support trend line just yet. Textbooks suggest that breakdowns happen closer towards the vertex So it is better to be cautious and wait for that breakdown to happen first. What could happen is from here is a decline towards the support trend line, and it bounces higher from here, and then it gets rejected by the resistance trend line and fall further from there. So of course, an early breakdown is of course welcome, but until there is a clear breakdown below the support trend line, I don't think we should adopt a bearish outlook on Mastercard just yet and just place a bearish potential on this name. Allianz, a German insurance and asset management company, has fallen from its high. I believe it may be forming a double top, a bearish pattern, but a bearish outlook can only be confirmed via a close below the neckline at 281.4. So what will give me more confidence about Allianz's bearish intent is that there is a close below the Ichimoku cloud, that's the bearish territory, and once this happens, further downside should be expected. And if Allianz closes below the neckline, then we can confirm a bearish outlook. The textbook target is at 257.97. Next, I'm covering Diageo. It's a British multinational alcoholic beverage company, and while you may not be familiar with its name, I'm sure you are familiar with its brands, which includes Guinness Stout and Johnnie Walker. It has fallen for quite some time, but in recent months it has bottomed. So I suspect that it may be forming a bullish pattern, a double bottom, and this requires a weekly close above the neckline at 2,677 to complete this bullish pattern. Of course, it could fall in the next 1 to 2 weeks because of this sharp rally. I've said this before in earlier videos, in past videos, that strong moves are often accompanied by a modest to mild correction of 1 to 3 weeks, after which upside should resume. So seeing that price action still holds above the 20-week simple moving average, I think that there is upside potential going forward, but a bullish outlook will only be confirmed once there is a weekly close above the neckline at 2,677, and if this happens, the textbook target is at 3,062.5. The last new coverage for this video is on ABB Limited, which I guess you are even more unfamiliar with. It is a Swedish-Swiss company operating in the field of electrical engineering. I think it may be forming a double top, but more confirmation is needed. A weekly close below the 20-week simple moving average will be a good start to suggest there is room for further downside, while closing within the Ichimoku cloud should give it further downside boost. A weekly close below the neckline, which is at 40.77, will complete this bearish pattern that has a textbook target at 29.15. In the video on the 15th of December, I maintained a bearish outlook on Novo Nordisk, saying that it has entered the bearish resumption phase over here. The textbook target remains unchanged at 619.6. The subsequent week saw Novo Nordisk crashing to and below this textbook target, therefore 100% of this textbook target has been reached. I will now be ceasing coverage on Novo Nordisk. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.